when we come to market structure, understanding market structure, you have to know we have basically in market structure, we're talking about the market trend. And we have the uptrend, which is the bullish market trend, and then we have the downtrend, which is the bearish market trend. So
Okay,
then we
trend.
have the sideways markets, basically arranging markets, a market that is not giving us
Yes.
higher prices or just lower prices. The market is just within high and lows, just ranging within a resistance zone and then support zone. But for the bullish market, we're having higher prices in the bullish market condition. And then in the bearish
Yes.
market condition, we're having lower prices. So basically, this is an example here. I believe you can see my cursor.
Yes, please.
All right, so this is basically an example of an uptrend, which is a bullish market. So for the bullish market is a market where we are having rise in the price, and then the market is making series of higher highs and then higher lows. So the market
I
is moving
lose.
to the upside, it's giving us higher prices. So we can see you would have the push of price to the upside, and then you have the return to the downside. And the return to the downside is what we call the corrective move, or what we call the pullback or retracement. You get it, sir?
Yes.
Uh-huh.
Yes.
So that is what we call
Yes.
the pullback or the retracement. And basically, when we are in a trending market, we want to take our entries from the pullback, not from the impulsive move, or what we call the expansive move. The expansive move basically is the movement of price, is that price movement or leg movement that is in alignment with the direction of the market. So you can see in a
Okay.
bullish market condition, this is the impulsive move. This movement aligns
Yes.
to the up movement of price, to the upward movement of price. Now, the pullback is a temporal reversal. It's just a temporal movement that is against the established major trend. You're getting it, sir?
Yeah. Yes. Yes. I do
Because
get.
in understanding market trend, we have the major trend and we have the minor trend. So we're going
I
to
know
be
the
looking at
trend.
the major trend and also the minor trend. You get it? So we're just
Yes, sir.
I'm just trying to show you the structure here. We're not looking at the minor or major. I'm just trying to tell you how to look at for the structure in that. So you can see in a bullish market, we have price created the high, we have low, and then we have a new high. This high
High.
created is higher than this. So that is why we call this higher high because it is
Higher
higher
high.
than the previous high point.
High.
Yeah. So you can see now price gave us the pullback, the corrective leg move, creating a new low. But then this low is higher than the previous low. So that is why this is
Too low.
a higher low. You get it?
Yes. Yes.
Because
Yes.
this
Yes.
low is higher than the previous low.
The previous low.
Applies to this one. This high is higher than this, so it is still higher high. And then
High high.
again is a new higher low. So basically, in a bullish market condition, you'll be looking forward to see the market creating higher highs and higher lows, higher highs and
And
higher
higher
lows.
lows.
And
Yes, sir.
where we pay attention to taking our entry is at the pullback. You get is
Yes.
pullback.
Yes, please.
We'll be patiently expecting price to give us a pullback, meaning we want to buy at a discount rate. You get.
Sure.
Imagine the
Yes.
market is pushing to the upside, for example, and then you saw this breakout. Let me highlight that so that you can see. The market broke through this swing high points.
Yes.
Maybe you can see my chart,
Yes, I can see.
right? So the market broke through the swing high points, and you just want to be a breakout trader. And then you see a candle closing above the swing point, and then you place a buy entry. Yes, you're going to be in
Mm-hmm.
profit because the market will push to the upside. Are you getting it?
Yes,
What you're
please.
going to see is that this pullback will come to the downside. And now, once the pullback is coming down, meaning the profit you've made in this movement is reducing. You-
Yes.
So you
Yes.
can see
Yes.
there's a possibility that maybe you saw the movement to the upside to this level, and then you've moved your stop loss maybe above your entry. You would see that the pullback will
Mm-hmm.
come and take out your stop loss, and then you have the impulsive
Yes.
move. You get. So we
Yes.
don't
Yes.
entry in
I
the
get.
expansive leg move. We want to look out for entry at the pullback leg move. You get.
Yes.
Yes.
Yes, sir.
So this is now for a bearish market condition. We want to see the market making series of lower highs and higher lows. And sorry, lower
And
lows.
lower low.
Yeah.
Yes.
So we have a higher price and then price created a low. Now, this is a lower high because this high point is lower than the previous high point. You get it?
Yes.
All right. So the market dropped to the downside, created a new low. This is a lower low because it
Yes.
is lower than the previous low point.
The previous low.
You get. So also
Yes,
in a
please.
bearish market condition, you're looking forward to take entry at the pullback leg move. So this is the expansive movement, and here is the pullback, which we call the
Yes.
retracement, or we call it the corrective move. You get.
Yes.
So
Yes.
in a bullish market, we want to see the market breaking swing high points. We want to see the market breaking this swing high points. Why in a bearish market condition, we want to see the market breaking the swing low points. That validates a bearish continuation when we see the market breaking
Mhm.
the low points.
Lower lows.
Yes, creating lower lows. In a bullish market, we are seeing the prices creating higher highs. You get.
Yes. Yes. Yes, sir.
This is basic to structure mapping. I'm just trying to just give the basic before we go into the institutional mapping process. So you see that the previous example I used is more of like we can see price just trending in a straight form. But you know that the market doesn't move that way. It moves in waves.
Yes.
Yeah.
Yes. Yes.
We don't just have the market trading down, up, down. No. We would see that we have structure within structure. I get it.
Yes.
So
Yes, please.
the market is fractal in nature. So what I mean by the market
Mhm.
is fractal in nature is that you see structure in all time frames. You see structure in
Yes.
higher time frame. You also see structure in lower time frame.
In lower time
You
frames.
get. So
Yes,
when you
please.
understand the identification of your structure, then that is when, let's for example, you are in a lower time frame and then you see a bearish structure, while in the higher time frame it is a bullish structure. If you don't understand how to establish structure, you might think that you are in a reversal because of the structure you're seeing in the lower time frame,
Yes, please.
whereas you're not in a reversal. So you have to pay attention to your major structure, and basically where you establish your major structure is something that you decide for yourself. Let's say, for
No.
example, you're using the 4 hour time frame to establish your structure. Are we together?
Sure. Yes. Yes,
This
please.
is where basically your major trend is, your major structure is.
Yes.
You get. So
Yes.
time frame lower than the 4 hour time frame is just a minor structure for you.
Okay.
You get
Okay.
it?
Yes, please.
All right. So when you establish that in your 4 hour time frame, you're seeing a bullish trend, an uptrend. And then let's say, for example, you go to the 15-minute time frame and then you are seeing a bearish movement. Then you should
Mm.
know that the bearish movement you're seeing in 15-minute time frame is a pullback movement. You get it?
Yes. Yes, please.
Pullback movement is aiming to return to the 4 hour time frame point of interest.
Sure.
See here, we have the bullish market condition, right?
Yes. Yes.
Can see
Yes.
that the movement are just in waves. You can see the movement are just in
Yes.
waves because we know that the market does not just move straight and then pulls back and move again straight. So now you can see
Mm.
this is our high, this is our low. Price created a new high and price
Higher
created
high.
a new low. Price created this new
Yes.
high, price created this new low. So you know, we said in a bullish market structure, we want to see the market breaking what? The swing highs. So
Yes.
the
The highs.
break of that swing high here, you can
Yes.
see we have
Yes.
our established uptrend. So this is the impulsive leg, and then this is the corrective leg, what we call the pullback.
The pullback.
Yeah.
Yes.
So
Yes, please.
in the impulsive leg move, you're going to see structure. In the corrective leg move, you're going to see what? Structure.
Yes. Yes.
So
Like you were saying that in the bullish structure,
yeah,
the impulsive move, you'll be seeing the bullish structure
yeah,
in the impulsive move.
yes,
And in the pullback or retracement, you'll be seeing bearish, right?
yes, that is it.
Okay.
Yeah,
That's against the mean or the like the impulsive structure.
yes, against
That's the
the
bearish.
structure. Yeah, that's
Yes.
bearish.
Okay.
Is
Okay.
is a
Okay.
temporal reversal. You get,
Yes, a temporal one.
yeah,
Yes.
it's a short-term price move. It's not the long-term price move.
Yes.
All right.
Yes.
Now you can see here, this is the impulsive move, right?
Sure.
We have, this is the pullback. Here we have this impulsive. Here we have the pullback. This is the impulsive. Here we have the pullback.
The pullback.
Lastly, we have
The
the
impulsive.
impulsive. So now you would see in the markets, in the impulsive leg move, you're going to have bullish structure. You can see now
Sure.
the structure you're seeing here, meaning is a minor time frame structure that is aligning itself to the major directional bias. This is the impulsive leg move. So we're going to be seeing bullish structure in the impulsive leg move. Now we have the retracement. Now this is the retracement. The retracement will be giving you a bearish market structure.
Structure.
Because you can see here we have price fell to the downside, gave us this low. Price pullback, gave us a lower high, and then price fell again. I would say
Yes. Yes.
now in the
Yes, please.
impulsive move again, we're going to have another bullish structure.
Bullish structure.
Yes. So now in that impulsive leg move, within that impulsive leg move, you're also going to have this structure. Now, if you do not understand how to identify structure, the moment you see that the market breaks through this low in the lower time frame, you might think
Mhm.
that the market is now bearish, right?
Sure.
But no, the main directional bias have not changed. The main directional bias is still bullish. This
So bullish.
is a minor structure within the impulsive leg move. You get it?
Yes, please.
So, meaning the market have not turned bearish yet. The reason we can see a bearish move is when the market returns and then break this low, because this is the ideal major structural low point, this low here.
Yes.
So this is just a pullback leg move. But then in the
Mm.
minor structure, you'll be seeing a bearish condition. And then you might think that the market have changed the character or we are having a market structure shift. No, what we are having is
Yes.
a minor market structure shift, not
Structure
a
shift.
major market structure shift.
Sure.
You're right. So
Yes, please.
what we are seeing basically is the possibility that price is returning to mitigate possibly an order block or a fair value gap. So that is the possibility that is existing, that the market is trying to return to a higher time frame sponsorship zone before we have the
Okay.
bullish
Okay.
continuation. You get?
Yes.
So I'm
Yes,
a
please.
theoretical example. So you have the picture of everything. You get?
Sure. Yes, please.
So I believe understanding this is clear.
Yes, it's very clear.
All right. In the bearish now, we're going to see that the market is breaking the low points, creating
Yes.
lower
Yes.
lows.
Lower lows.
Yeah. So we'll be having the break of structure to the downside. So we can see that the market is breaking structure to the downside, giving us new low points. So you can see our major structure is we have the fall of price to the downside. Here's the pullback where we have the lower high. Price fell, created the lower low. We have the
Mm-hmm.
that created the lower high.
The lower high.
Sphere creating a lower low. We have
Lower low.
pullback, and then finally price gave us the last fall to the downside.
Yes.
What you can see also within this impulsive leg move in a bearish major trend, you're going to have the
Mm-hmm.
minor structure giving you also a bearish movement to the downside. You can see that
Sure.
price will be taking out low points. And then in this case, we're going to have the pullback as a bullish condition.
Yes.
All right. So you can see here we have the fall to this low, price pullback giving us a bullish structure, creating the
Yes.
major lower high points.
Lower high.
Now we have the fall of price to the downside in alignment to the major trend, giving us the
Yes.
minor bearish structure within the impulsive leg move. You can-
Mm, sure.
And then you can also see the pullback. So, in the case of not understanding how to identify structure, when you see that price breaks through these high points, you might think that the condition
Mm,
of the market is bullish. No, that is just a temporal bullish move against the ideal major trend. You get it, Mr. Chris?
sure.
Yeah.
Yes.
So the possibility or anticipation of price is to pull back into a premium zone, mitigate a
Mm-hmm.
censorship zone, and then continue the bearish movement.
Bearish
You
movement.
get it, sir?
Yes, please.
Basically, if you've been following from the YouTube content, I've been stressing this. I always say that the market moves to grab external liquidity, return to
Yes.
fill up the internal range liquidity in the form of fair value gaps, or take out the
Yes.
internal liquidity in the form of swing highs. You get it?
Sure.
So
Sure.
inter
Yes.
so this internal liquidity in the form of swing highs are the minor structure within the impulsive move.
Okay.
You get it? What you can see
Yes, please.
is now these are all internal liquidities. Let me identify that for you. This high is an internal range liquidity. This other high here is also an internal
Yes.
range liquidity.
Green liquidity.
Yes. So where we
Mm,
have the external range liquidity is now this is the external range liquidity. This swing low points. The major
yes.
here is the external, while the minor swing
Yes.
points are the internal range.
The internal.
Yeah. So you can see now price pull back to the upside, took out all liquidities resting here. Because why?
Mm,
This is the anticipation of retail traders. Let me push this outward like this. So what retail traders will anticipate is since price gave us this pullback and fell, they will expect this to act as a resistance. Are we together?
sure.
Yeah. So what the
Yes.
institutions will do is they know that there are a lot of stop losses here and orders here. So what they'll do is they'll
Yes.
keep the price above it, meaning they know that there are liquidity. Liquidity basically means
Mm, money. Yeah, cash.
yes. So they know money is
Mm,
resting here. So they would take out those positions and also the stop losses before they move in the intended institutional direction.
direction.
You get
Yes.
so these are what
Yes,
we call
please.
the internal liquidity. So the institutions will push price to grab all internal liquidity and then they push price to the downside to take out the external liquidity. You get
Yes.
so this
Yes, please.
high here is what we call the buy side liquidity.
Liquidity.
The low here is a sell side liquidity.
Yes.
So when you have your structure, you're identifying it, you must understand that the high is the buy side, the low is the sell side liquidity.
Yes.
All right.
Yes, please.
Lastly, before we now go to the chart, is this other theoretical example, which basically I've already explained to you. It's all about the multiplex nature of the price, which I've already explained. So you can see, if I should ask you now, what is the major trend from this image here?
This is a bearish
Okay.
move or a downward trend.
Yes, this is a downward trend. But then you can see
Yes.
that in the downward trend, we also have trend within it. You can see that.
Yes.
We also have trend within it. If you understand structure, you understand structure very well. Then you've solved, let me say, 80% of everything that has to do with technical analysis.
Hmm.
If you understand structure very well, structure is king in the market. That's just it. So
Sure.
see that the major is a bearish movement, a downtrend. But you can
Mm,
within that downtrend, we have structure. That is what we mean by price is fractal, meaning we see
yes.
structure in all time frames. Meaning this is the major structure, the thick black line, while we can see that
Mm,
the red and the aqua blue color line are the minor structures.
the minor structure.
Yeah. So the major structure is bearish. So we can also see that the impulsive leg move, we are having a bearish movement. The pullback,
Yes.
we are having a what? Bullish
The bullish
structure.
movement.
Yeah, the bullish.
No, yeah, structure, structure.
Yes. So this is now for the bearish market condition. So that is where we frame our entry. We frame our entry from the lower structure we are seeing in that main structure. We establish the major structure, the major trend, and then we utilize the lower time frames for trade executions.
And entries. Yes.
So this is simply for this is just simply for the bullish case.
Yes.
You can see we are the major trend here is a bullish,
It's the bullish trend.
yeah.
Mm,
Then within that bullish trend, we also have structure. Within that major bullish, we have a structure because we know that the major trend will give us an impulse and then give us a corrective move.
yes.
So the impulse will be bullish, the The corrective move will be bearish.
Bearish. Yes.
So in the higher time frame, we may not see structure within that corrective move. But when we jump to a lower time frame, we'll see structure within that corrective.
Structure within it.
You get it?
Yes.
So
Yes.
that is it.
Yes, please.
So also in the impulsive move, we may not really see structure because we could just see sharp movement of candles in the impulsive move. But when you jump to the
Yes.
lower time frame, you would see the possibility of structures in the minor trend, in the lower time
Mm.
frame. For you to identify
That.
structure, you have to know pullbacks. So let's use this example. So now you can see we have the bearish movement of price to the downside, right?
Yes. Yes.
Let's identify the last candle that this bearish movement printed. You can see this is the last candle. That
Yes. That's the last.
yes. So we've marked out the low. So for you to identify a valid pullback, the movement to the upside must take out the high of this last down close candle.
Yes.
If price doesn't take out the high of this last down close candle, that is not a valid pullback. So you can see we have the fall of price. This is the last printed down close candle. This candle created the swing low point. Bullish candle to the upside took out the high of the last bearish candle.
Bearish candle.
So this is a
Yes.
valid
Yes.
pullback. So it means for this we have the fall of price to the downside here, and then we have a valid pullback to the upside. I believe you can see it, sir.
Yes, please. I can see it.
We have the fall of price creating the low. This is the last candle, and price pushed to the upside to cut the high. Now we have the bearish continuation to the downside. Price created a new low point.
You.
Now you
Yes.
identify where is the last candle at the swing point. This is the last candle that created the swing low.
Yes.
So for you to have a valid pullback, then price must return to the upside to take the high of that last candle.
Last. Yes. Yes.
So, but what we can see here is the return of price here did not take out the high of this last bearish candle.
Sure.
That is not a pullback. It is not a pullback.
Yes.
Basically, price just is still within this candle. You can see that the low of the candle is protected, the high is protected,
Yes. Yes.
meaning there is no grab of liquidity of the last bearish candle. These bullish movements are just inside bar movements, inside candlestick within this bearish candlestick.
Yes.
So this is not a pullback. So this is how we now identify the pullback. We have the fall. This is a valid pullback. So it means from this high, we have a straight fall of price to the downside.
Yes.
So meaning we
Yes.
have impulse, corrective, impulse.
The impulse.
Because this bullish candle are just within the bearish candlestick. Now let's look at this other example. Now here we have the fall of price to the downside. Now this is the last candle, right? This is the last
Yes.
candle. And price pushed to the upside, took out the high of this candle. Are we together? It is
Yes, please.
this candle that we have the pullback. Now you can see this bearish candle took a move against the bearish movement and took out the high of this candle.
The previous candle.
Yes. So meaning this is the fall of price. We have the fall to the downside. And then still within this bearish candle is where we had the pullback. Because this
Okay.
bearish candle took out the high of the previous bearish candle. So now this
Yes.
is actually the last printed bearish candle. So you can see this bullish movement did not take out the high. If this bullish movement had taken out this high, then this becomes a valid pullback. Are you getting it?
Pullback.
But then you
Yes,
see
sir.
that this bullish movement are still within the low and the high of this bearish candle.
Yes.
So
Yes.
this is not the pullback. This is the pullback. This same candle that is the last candle is the pullback because it gave the bullish push of price to the upside and took out the high of this candle.
Yes.
So meaning it took out the liquidity resting above this bearish candle. So we have the fall. This is the pullback. Pullback basically means the movement against the trend. From this candle is when we now identify we have this impulsive move to the downside. So even if this is the bearish printed colored candle, you can see that it's the bullish candle that gave us the lowest low points.
Yes.
So this is our swing low, not this one. Even though this
Not
is a
the
bearish colored candle, it's this
bearish.
that gave us,
Yes.
yes. So it is this candle that gave us the ideal swing low points.
Low one.
So
Yes.
meaning for
Yes.
us to identify our valid pullback, we'll pay attention to this candlestick. Since this candlestick created the low point. So we want to see the
Okay.
movement of price to the upside to take the high. Price went to the upside, took out the high. So we have our
Yes.
pullback. So here we have a pullback, and now we have a fall.